Good morning, students. Welcome to the live virtual revisionary classes of ICAI. Today, we will be revising cost accounting, and in that, we will be revising the process costing and joint and byproducts. So, once again, good morning, everyone. Let's start with the session. In process costing and process accounting, we will learn about process accounts, normal accounts, abnormal accounts, and how we will prepare the process accounts. Let's look at the first step. Process accounts can be either you can have 4 columns or 3 columns. So when you prepare the process account, what happens in process account is that the outcome of process one will move to the next process as input. So in process one, whatever the elements of cost you incur, like you may be incurring the material cost, then you incur the labor or wages, then you incur some overheads in the process cost. All these expenses, for example, you had 1,000 units, which is, let's say, at the rate of 5. So 5,000 rupees of raw material has been used in process one. So if we are preparing process one account, the output of process one will move to the next process. Similarly, when you incur wages, let's say 3,000. So on 1,000 units, you are incurring a wages of 3,000. That becomes 3 rupee per unit. And similarly, if there are overheads of 4,000, so you are incurring 4 rupee per unit. So ultimately, all this will move to the next process. So 1,000 units, which you had input in process one, will move at the rate of now 5 plus 3 plus 4, 12 rupee, 12,000 rupees. So this is how you prepare a process account if it is the first process account. Okay. Ensure that always the units will match with the units and the output amount should match with the amount. So this is how you write up a process account. Sometimes, however, you miss this column of rate. You may not use this. In that case, you will simply have particulars, units, and amount. So I can write here to material. And within this column, I'll write at the rate of 5 rupee per unit. Your units can be also in kgs if it is 5 rupee per kg, right? And similarly, when I'm moving to the next process, by process 2, this will also be calculated here at the rate of 12 rupee per kg per unit. So this is the format of how you prepare the process accounts. But generally, what happens in process is the process may incur some losses. It is not necessary, and it will generally not be that all the output, all the units that they are there, let's say 1,000 units is input. Then out of these 1,000 units, there may be some loss. So if I say that there is a normal loss of 10%, so 1,000 into 10%, 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 1,000 into 100 units will be lost. So in the next process, what will happen is 900 units will move to the next process. So that means there is a normal loss. So what should happen is 900 units should move to the next process. Now, this will not be at 12 rupee per unit because the good units will bear the cost of normal loss. So if I continue with the same example, we had material which was 5,000 and wages incurred were 3,000. And similarly, overheads were 4,000. So the total cost was 12,000, but now it will not be 12 rupee per unit as the cost of 12,000 has to be borne by 900 units. So it will be inflated, which will come out to be at the rate of 13.33 rupee per unit. Okay. So this will be the cost of 900 units, 12,000 in totality. And the cost per unit will now be not 12, but 13.33 rupee per unit. So once again, but the total of units will match with the units and the total of amount should match with the amount. Right? I hope so far it is all clear to you. So this is how you prepare a process account. Similarly, the output of process 1 will become the input for process 2, and the output for process 2 will become the input for process 3. So this process goes on depending upon how many total processes are there until the amount goods are finished. So from process 2, it might move to process 3, and maybe process 3 is the last process. So from process 3, it will go to the finished goods account or warehouse. So this is proper sequence. The output of process 1 goes to process 2 as input. The output of process 2 goes to process 3 as input, and process 3 being the last process, whatever is manufactured is completed units, and they move to the warehouse or the finished goods account. The sequence will not change, and each process may have its normal loss percentage, which may be different from each process. So for process 1, if there is a 10% loss, it is possible that in process 2, there is a 5% normal loss. And similarly, in process 3, there is again a 2% normal loss. So normal loss is established over a period of time with industry standards as well as experience and past data. So if 1,000 units were introduced in the process 1, you will end up getting only 900 units in process 2 and 5% of 900, then there would be another loss of 45 units. So 855 units will be there in process 3 and another 2% loss in process 3, which means another 617 units approximately lost. So the finished goods should be 838. So this is how the process accounts goes on. However, there is a possibility that whatever the 100 units of normal loss is, they may sell as scrap. So if the normal loss sells as a scrap, the entire cost of 12,000 should not be borne by 900 units. So what we will do in that case is, we will subtract from it whatever is received from the sale of normal loss. So let's say normal loss can be sold, or the scrap can be sold at 2 rupee per unit. So if that is the case, 12,000 should not be borne by the 900 units. 12,000 minus 200. The total cost which has to be borne by the 900 units would be 11,800. So 11,800 when divided by 900 units, the cost will be 13.11 instead. Okay. So this 100 units will give you 200 rupees, and the cost of 11,800 is to be borne by the 900 units. This will remain the fundamental rule that your total cost minus scrap realized from sale of normal loss divided by total units minus normal loss units. This will always be the cost of your final output, which is moving to the process 2. And also, if there is ever any abnormal loss or abnormal gain in the process, that will also be valued at this price only. So whatever this figure is, this will be the figure for process moving, units moving to the next process. This will be the rate for units which are abnormal loss, or if there is an abnormal gain, this will be the rate at which the abnormal gain will apply. Now, where does abnormal loss or abnormal gain comes from? So in this process 1, like we have taken an example, 1,000 units were introduced, and there should be a normal loss of 100 units, 10%. So 900 units should move to the next process. Now, if in the next process we have only 850 units, which is completed and which is going to move to the next process. So where have the remaining 50 units gone? They become abnormal loss. And abnormal loss will be written on the credit side here only, if there is any. And similarly, if we say that in the next process, 920 units have moved, then where do you have this extra 20 units? They will come to the debit side to abnormal gain. Abnormal gain may also be called as abnormal effectiveness. It doesn't mean that some 20 units have come from some other place. It just simply means that when the workers were handed over 1,000 units, we were expecting them to produce 900 units. But they have done their job a little better or maybe a little more carefully. So they have generated not 900 units, but 920 units. So if they have generated 20 extra units, this becomes a abnormal effectiveness or abnormal gain. Similarly, when you handed the workers to do the 1,000 units, to work on these 1,000 units, and we were expecting them to lose 900 units. So we were expecting 900 units to be produced. But if they produce only 850 units, so they have generated an extra loss of 50 units more than the normal loss. That will be treated as abnormal loss. So if you look at this entire account, all the elements of cost will be on the debit side, and on the credit side, you will have normal loss and the units moving to the next process. If this 900 plus 100 is exactly equal to 1000, then whatever the normal loss was expected, only that was generated. However, if this is not 900, if this is less than 900, there will be abnormal loss. And if it is anything more than 900, there would be abnormal gain. Abnormal loss will be on the credit side only, whereas the abnormal gain would be debited to the process account. And if anything is recovered from normal loss, that amount should be credited in the amount also. So if you look at this, from here we can prepare a normal loss account or abnormal loss account, or if there is an abnormal effectiveness, a abnormal gain account. So let us first look at normal loss account. How you prepare the normal loss account? By looking at the entry in the previous process account, you will have here to process 1. There were 100 units of normal loss, which was supposed to be sold at 200. So you will sell these units now by bank. These 100 units would be sold and you will realize the 200 rupees. That is all that you will do in the normal loss account if there is no abnormal effectiveness. So then this is correct if there is no abnormal gain. However, let us look at here. What happens if there is abnormal gain? So what will happen if there is abnormal gain or effectiveness? Like in the previous example, 1000 units were introduced in process 1. 100 units should have been lost as normal loss. So the output should be 900. But if actual output is 920, there is a difference of 20, which will be treated as abnormal gain. Now, if you look in totality, if you have introduced 1000 units and the output is 920, that means the units which you have as scrap is only 80 units. So, but the debit side will remain same, process 1 account. 100 units were debited in the process, should have been the normal loss, and they should have realized 200 rupees. However, when you are selling the scrap, you could only sell 80 units, and then at the rate of 2 rupee per unit, 80 units will only give you 160 rupees. So your normal account has not yet matched. There is a question in the chat window. Instead of bank account, can we write cost ledger account? We are not sure whether we are following integrated or non-integrated accounts here. So please stick to by bank. So process 1 account, 100 units, 200, and by bank 80 units, which will sell at 160. So where we will take the difference from? The abnormal gain account will bear this difference. So by abnormal gain account, the 20 units which should have been sold at 40, we are not going to get that. So the abnormal gain which you thought was there will be reduced by 40. And now your account will match 100 units, 200 rupees, and 100 units, 200 rupees. Okay. Right? So this is how you prepare the process account. And if there is abnormal loss, it will be on the credit side. And if there is abnormal gain, it will be on the debit side. So let us take this one by one, case by case. And now, if there is abnormal loss, so if out of 1000 units, you should have 900 units as the normal output. But if your actual output is 850, then you have a abnormal loss of 50 units. So it was also on the credit side of the process account. So you will write to process account 50 units were there as abnormal loss. So like I said, the fundamental rule, total cost minus scrap realized from sale of normal loss units divide by total units minus normal loss units. So the total cost was 12,000 in our example. Scrap realized from sale of normal loss was 200. So 11,800 is the cost which is to be borne by good units, which comes out to be 13.11. Now this rate when applied to 850 units which move to the next process, and the same rate will be applicable to the abnormal loss units, which is 50. So 11,800 divide by 900. The rate established is 13.11. And this, when multiplied by 50, will be the cost of abnormal loss, 655.55. I'll call it 656. And into 850 will be the price of normal goods which move to the next process, 11,145, 44.44, rounded off to 11,144. So these 50 units should have given us 656 rupees. This becomes our loss. We should have them as good units, but we don't have them as good units. So there's a loss of 656. But just like your scrap units of normal loss, scrap can be sold for 2 rupee per unit. So the scrap dealer is not going to say that this is your abnormal loss, I'm not going to buy it. He's going to buy the scrap, whether they are normal loss or abnormal loss. So he will take the entire 150 units. So we thought our loss was for 50 units, 656, but out of that, some amount will be recovered. These 50 units can be sold for 100 rupees, and our true loss, which will move to profit and loss account or costing P&L account that we can say here, will be 556 rupees only. Once again, your amount should match with the amount and the units should match with the units. So this is your abnormal loss account. Had there been abnormal gain, we would have written on the credit side by process 1, 20 units. Now the cost of those 20 units will also be taken in the similar fashion, 11,800 divided by 900. This will be the rate established at the rate of 13.11. So 13.11 into 20 will give you 262.20. I'll ignore the 0.20, so 262. So this gain will move to the costing P&L account or the P&L account. Okay. Once again, we have a message in the chat window. What does it say? Abnormal gain can also be called as abnormal effectiveness. Yes, we can call it either abnormal gain account or abnormal effectiveness account. So this will be your profit, but out of this 262, we will charge from the normal loss account the 20 units, which could have been sold for 40, is not what we are going to get now. So our true profit is only 222. So this entry, you see, the normal loss account will be there correspondingly in the normal loss account, and here it is. Okay. So if there is no abnormal gain, then the normal loss account is simple, to process account and buy back. But if there is abnormal gain, you will not be having the 100 units, be able to sell this as scrap. You have only 80 units to sell as scrap. So where will the another 20 units, who will bear that 40 rupees? That has to be borne by the abnormal gain account. So these 20 units, which could have been sold for 40, now that we don't have it, that will reduce the profit from the abnormal gain account. So when you had an abnormal gain account, you thought you have 20 units extra. And as each unit was 13.11 rupee per unit, there was a profit of 262. So this will be the cost. This will should move to the costing P&L. But even if we did not get these 20 units at the rate of 13.11, we would have still got these 20 units, which could have given us 2 rupees. So the true profit is not 262, 262 minus 40. Your true profit is only 222 because of the abnormal effectiveness of the workers. It's not about all about workers only. As we have done the labor costing also, we see that whatever the extra output is, sometimes there is the circumstances, the environment, the management, the supervision. So entire credit cannot go to the workers. We again have one message in the chat window. If normal gain is also, then what we will be the treatment. Okay, you are asking about normal gain. So like you are saying, if 1,000 units are introduced in the process, there is an output of 1,020 or 1,050, which is normal. So 2% or 5% is a increase in whatever the input units are. It generally doesn't happen when you have given a input of 1,000 units. The output will also be anything from 1,000 or anything less than that. Something will always be lost in the process. Unless you add a catalyst, the units will not increase, which we don't assume here. So there will be a loss. 1,000 kgs, 1,000 liters of kerosene. After some time, when you open up the container, you will find that there is not 1,000 units. Maybe there are 1,980 liters or 990 liters. So then the goods which are kept as raw material, they have a tendency to lose, particularly if you have a smell from any kind of raw material. That means they have some nature, something is moving in the atmosphere which is creating that smell or the odor. So it means that you are having some loss in the inputs, right? So when you expose this in raw material and you start processing it, you may end up getting some losses. Think about a process of creating a butter out of cream. So is it that when you take 1 liter of milk, you get 1 liter of butter? No. From 1 liter of milk, you will get very little cream, and from that cream or curd, you will get little butter. And then when butter is further processed to prepare ghee, you will have further less amount of ghee. So each process will have a nature in itself that some part of the process material will be lost. So that is a normal loss that we expect to be occurring. Now, if the loss is anything beyond that, it becomes abnormal loss. But if the loss is a little less than what we expected, you have more output than you thought, that becomes abnormal gain or effectiveness. Okay. So this is how you prepare a process account. So let us take one example here in which I will completely take all the points. Let's say raw material introduced in the process is 5,000 kgs at the rate of 10 rupee per kg. Wages incurred are also 40,000 rupees. So you see, this is material is also 50,000, wages are also 40,000. You will see some processes are material intensive, where material cost is more, labor is less if they are automated. Some processes are labor intensive, where the cost of material is not very high, but the wages are very high. Particularly in handicraft industry, you will see that with just one thread, which is of negligible value, the workers, craftsmen create beautiful pieces. So there will be labor intensive. But when material and labor both are important, it becomes uh, both have become significant. So it is neither material intensive nor labor intensive industry. And whenever you have material and wages, obviously some kind of overheads are also charged, let's say 20,000. Remember one thing, some indirect expenses may also be given to you, which are not particular to a particular process. For example, indirect expenses 90,000, which should be three processes. Let's say the entire process is three processes activity. So amongst three processes equally, or some ratio may be given. And if no ratio is given, you can divide the indirect expenses and distribute these indirect expenses amongst the three processes in the ratio of wages. So let's say to material 5,000 kgs at the rate of 10. So material cost is 50,000. Wages cost is 40,000. Overheads cost is 20,000. And share of indirect expenses, like I said, 90,000 divided amongst three processes equally. So let's take it 30,000. So this is the total cost now that we have debited to the process one account. Normal loss is given as, once again, let's take it 10%. So we had expected 4,500 kgs to be the output. Actual output is 4,200 kgs. Scrap is sold for 2 rupee per unit. So let's establish our fundamental principle, total cost. Total cost comes out to be 50 plus 40, 90 plus 20, 110 plus 30, 1,40,000. So our total cost is 1,40,000. And because I don't see abnormal gain here, so I'm closing this total cost and I'm writing the total as 1,40,000. Minus scrap realized from sale of normal loss units. Scrap is sold for 2 rupee per unit. Normal loss is 10%. So how many units should be normal loss? 5,000 kgs, and 10% of 5,000 kgs is 500. They will be sold at the rate of 2 rupee per kg. So 1,000 will be realized from sale of normal loss. So the total cost which is to be borne by good units is 1,39,000. And good units expected are 5,000 minus 500. So 1,39,000 should be the cost of 4,500 units, which means at the rate of 1,39,000 divided by 4,500, it's 30.88 or 89. So how many units will move to next process? The actual number of units which are manufactured, 4,200. So what happened to the remaining units? This is your abnormal loss. So whereas we should be having 4,500 units, we have only 4,200 units. So there is an abnormal loss of 300 units. But the rate of both of them will remain same at the rate of 30.88 or 30.89 if I round off to 2 digits. So when I multiply it by 4,200, I end up getting 1,29,733.33. I'll ignore 0.33. And when I multiply it by 300, I end up getting 9,266.67. So I'll call it 9,267 so that the total always matches. Now the tendency is to round off to the next number if it is greater than 0.5 or greater. But if had it been 30.5, in both the places you would round off to the next number, it will become, the totals will not tally. So please ensure that you round off in such a way, if there is a difficulty, that one figure you will round off till next number and the other you will round off to lower number. So this is the detail of 5,000 units. I hope this is clear. We have another message on the chat. Let's see what it is. Why ratio of wages will be used for indirect expenses. You can use any, like I said, if it is a material intensive industry, you should go by the ratio of material cost. If it is labor intensive, you can go by the labor cost. You can go it as a percentage of prime cost. So you can take any base. But generally, when we talk about in any indirect expense or overheads or anything, if you have to take one of the bases, wages is generally the best because overheads or indirect expenses are incurred when the workers are working. So if nothing is given, indirect expenses should be best debited in the ratio of the wages. right? So this is how you will prepare the process one account. Now, normal loss account will be simple here. To process one, 500 units at the rate of 2000. By bank, 500 units at the rate of 2000. Similarly, abnormal loss account, 300 units, debit 9267. We'll do it. Normal loss account, to process one, 500 units, 1000. By bank, 500 units, 1000. Abnormal loss account, to process one, 300 units, 9267. But we will see that these 300 units will also be sold as a scrap. So this will also give you 600 rupees. And therefore, your true profit and loss would be 9267 minus 600. So 8667. And similarly from here, in process 2, what will you write? To process 1, 4200 units of 1,29,733. In this process also, maybe you introduce some other material. That would be a secondary material or sundry material. Let's say another 20,000. And wages, overheads, and share of indirect expenses. So let's say another wages introduced 60,000, another overheads incurred 50,000. So process 2 has input of 4,200, and then let's say the normal loss in process 2 is only 2%. So by normal loss account, 2% of 4,200, 84 units should be lost. And the scrap of process 2 sold at 10 rupee per unit. So this will be sold at 840. Once again, we will establish the rule. What is the total cost? 1,29,733 plus 20,000 plus 60,000 plus 50,000 and plus 30,000. So plus 1,60,000. So the total cost is 289,733 minus 840 and divide by total units are 4,200 minus 84. Now, whether there is abnormal loss, abnormal gain, doesn't matter. This rate will be the applicable rate. This minus 840, ultimately 2,88,893 is to be borne by 4116 units. Now, if in the next process we transfer, or let's say this was the last process, so finished goods account, 4150 units. So the rate will be same only. 288,893 divided by 4116. So these are transferred at the rate of 70.187. Now, if you will look at this side, the total of the units will be 4234. Whereas here you have 4200. So there is going to be abnormal gain of 34 units. This will also be charged at same rate of 70.118187. So this is 2386. You will see that the total should match here. Okay. So when you're preparing the normal loss account, you will write for, in this normal loss account only, you can see process 2, 84 units, which will give you 840. But because you don't have scrap of 840 to sell, the scrapped units are only 50. And by abnormal gain, 34 units, which could have sold for 340, which you don't have. Or you can process normal loss account, process 1 separately, and normal loss account, process 2 separately also. Once again, yeah, 70.187. 187, I rounded off to 188. Right? So this is how you prepare the process accounts. I hope it's clear to all of you. Process account, normal loss account, abnormal loss account, and abnormal gain account. Remember this fundamental principle: whether there is abnormal gain or abnormal loss, the same rate will be applied to the units which move to the next process. The same rate will be applying to the abnormal gain units. So this is your profit. However, what could have realized as the scrap, that should be deducted and balance will move to costing P&L account. Similarly, had there been abnormal loss, that would also have been taken at 70.8188. But once again, if there was abnormal loss, those units could have also been sold as a scrap, and whatever you realize should be deducted, balance should move to costing P&L. In process account, our next topic is equivalent units. Here we prepare 4 statements. One is statement of equivalent units. Second is statement of cost per unit for each element of cost. Third, we allocate these costs to the different, assign these costs to the different products like work in progress, finished goods, abnormal loss, abnormal gain. And finally, from this, all 3 statements, we use them to prepare the process account. Let us look at how we prepare the statement of equivalent units first. So I've taken an example here. This data pertains to process 1. There was an opening WIP of 1500 units. So you already had 1500 units, which was WIP, and it was 100% complete as far as material is concerned. However, labor and overheads, it was only 33 and 1 by 3% complete. Now 33 1 by 3% you can take as 1/3 complete. So in these 1500 units, you don't have to incur any material as material is already 100% complete. So in this particular period, or this is the opening WIP for this period, it could be a year, it could be a quarter, it could be a month. So in this period, on these 1500 units, you'll not need to require to input any material, 0%. However, labor and overheads, it was 1/3 complete, or 33.1/3, 1 by 3% complete. So for labor and overheads, you will require to work 2/3 on these units, or 66.67% efforts are required. So 1,500 units and 66.67 or two-third efforts are required. It's like 1,000 units which you will be completing 100%, right? So if I take 100 units and I work on them 50%, so isn't it equivalent that if I could have taken only 50 units, I would have completed them 100%, right? Another example from your relevance. Let's say you start one chapter and do it 50%. You start another one chapter and do this one also as 50%. And if both are same, so instead of two chapters done 50%, if you had stick to this one chapter, it would have been 100% complete. So two chapters 50% complete is equivalent to one chapter 100% complete, right? So this is equivalent to one unit, one chapter 100% complete. Your efforts are as much. So on 1,500 units, as you had already completed one third job, so that's equivalent to 500 units 100% complete. And in this period, you have to complete them remaining 66.67%, which means that is equivalent to as if you are completing 1,000 units from scratch. Okay. Then you had another 18,000, 1,500 units freshly introduced in this period on which you are going to work. So how much is the input of material? Input is some part 100% work in progress and some part freshly introduced. So in this period, you have to work on 20,000 units. Already there was WIP and freshly introduced is 18,500. So you have to work on 20,000 units. So what did you do for this 20,000 units? Let's look at the output. Out of these 20,000 units, you had a closing WIP of 5,000 units. So I'm looking at where these 20,000 units have gone. So out of this 20,000, 5,000 is my closing WIP, which was degree of completion, material 90%. So on material also, you could not 100% use it. 90% as far as material is concerned, and 30% as far as labor and overheads are concerned. Then there is a normal loss in the process, which is 10%. When you look at the normal loss, just see it can be given as 10% of total input. So total input is 20,000. So here the normal loss is 10% of 20,000 units. So the normal loss becomes 2,000 units. The normal process loss may also be given as 10% of current input. In that case, it would have been of 10% of 18,500, 1,850 units. And normal loss can also be given as a percentage of gross product. So either it can be given for total input or it could be given for current or gross production. So if total input is there, we have opening WIP plus introduced. That is 20,000. If the normal loss was given for current input, we would have taken only for 18,500. That would have become 1850. But if gross production is taken, then you take opening plus introduced minus closing WIP. So 1,500 plus 18,500, 20,000. 20,000 minus 5,000, it would be 15,000. And then 10% of 15,000 would have been 1,500. So when normal process loss is given as a percentage, just see whether it is given as a total of percentage of total input, current input, or gross production. If nothing is given, you can take it either as total input or current input, whatever suits your answers better, maybe which gives you a better rounding off. So if I take it as 10% of total input, I see that out of the 20,000 units, 2,000 units should have gone as normal loss. So out of 20,000, I know the details of 7,000. So 20 minus 7, that means I should have an output of 13,000 units. But when I see that the units transferred to the next process is 12,000. Transferred to next process, 12,000. So where have the balancing 1,000 gone? That is assumed to be abnormal loss. So 1,000 units are abnormal loss. So I have the details of the output as well. Now I'll prepare the statement of equivalent units. Once again, we have a message in the chat window. If given for material input. What if given? Process loss will be given as for material input. Then we will take it only for 18,500. Not of the total input, but of current material introduced. Normal loss. 10% of material input, then you can take it for 18,500. So this is the format that you use to prepare the statement of equivalent units. That's what I have explained. You're asking me why of material input. So material input in the current period is 18,500 units. So you should take for 18,500 units, 10% or 2%, whatever the percentage. Now the statement of equivalent units can be prepared either on FIFO basis. Alternatively, we can prepare for weighted average. So statement of equivalent units using either FIFO method or using weighted average method. So first I'll tell you how to prepare the using FIFO method. In FIFO method, we assume that whatever the opening WIP was there of 1,500 units, we are going to complete that first and move it to the next process. And the 12,000 units which have moved to the next process, out of that 12,000, 1,500 opening WIP have moved and 10,500 units have moved from the current material introduced. This is your assumption when you use the FIFO. So 12,000 units have moved to the next process, 1,500 opening WIP, and the remaining 10,500 from the current production. Another important thing is normal loss is always taken as 0% complete because we have to bear the cost of normal loss is to be borne by the good units. Opening WIP, which you are now completing, is 1,500 units. As it was already 100% complete as far as material is concerned, so material you will not apply, but labor and overheads was 66.67% required to be completed. It was only 33.13% complete. Then you had some units introduced and also completed, but the total completed units were 12,000. So out of that, 1,500 is opening WIP. So the remaining 10,500 units, which was introduced also in this period. So you have completed it material wise also 100%. Labor wise also you have completed it 100%. And overheads also you have completed it 100%. So you can see the difference. Opening WIP was already completed as far as material is concerned. So you did not put any effort here. But labor and overhead, which was 1/3 complete. So 2/3 efforts you will put here. Whatever was introduced and completed, 100% it was done in this period only. You have a closing WIP of 5,000 units, which was 90% complete in this period as far as material is concerned. So this closing WIP will move to the next period as opening WIP. And in that period, then you will take it as 10% required to be completed as far as material is concerned. So here, closing WIP is 5,000. You can see it was 90% complete as far as material is concerned and 30% complete for labor and overheads. So labor wise, it is 30% complete. Overheads also, it is 30% complete. Another important thing here is 1,000 units was your abnormal loss. So abnormal loss, if no percentage completion is given, we assume it to be 100% complete and then realize that these are not good enough to be transferred to next process and we call them a abnormal loss. Look at the total of the units. 2,000 plus 1,500, 3,500 plus 10,500, 14,000 plus 5,000, 19,000 plus 1,000, 20,000. So the total of units will be 20,000, which should match with the input. Particulars of input, opening WIP, 1,500 units. Introduced during the process, 18,500 units. So the total will be 20,000. We have some messages in the chat window once again. Let's see. Opening is not material input. Here, when you say if, so generally I have told you it would be given as normal loss is a certain percentage of total input, current input, or gross production. But if you are saying that opening is the loss is 10% of material input, opening WIP was not input in this period. It was already there from the beginning. It was carried from the previous process. Okay. However, if you think that you will consider that also as material input in this period, you can put your assumption and you can put a footnote there that we are assuming that material input will include the opening WIP as well. Okay, if opening WIP material percentage 50%, that material input will include for normal loss. You cannot say for that it's 50% complete, then another 50% is there. Maybe you can take it. This will be complicating things. What you are trying to say makes sense that if opening WIP was also not at all complete as far as material is concerned, so now you start working on 18,500 and 1,500, 20,000 units. So obviously you'll start losing there also. But if opening WIP was 100% complete as far as material is concerned, and then you start applying labor and overheads, even then there can be a loss. It depends. Generally, opening WIP is 100% complete as far as material is concerned because when you start doing a process, you pick up a unit and you start working on it. So the material is already 100% applied. You pick up let's say the process is to assemble the chairs. So you have some kits where the chairs are unassembled. So you pick up the kit. That means you pick up the 100% material and you start assembling them by putting the wages and overheads. But then in the subsequent process, you have to paint it. Now, paint cannot be picked all of a sudden. Paint is applied as and when you are doing the labor and overheads. So in the first process, the material is 100% and then you start working on it. You pick up the 100% material and you start working on it. But in the second process, the material is put in the process as and when you are incurring gradually labor and overheads. But let's not get into that technicality so much. Let us just focus on what the language is. If it is total input, take 20,000. If it is current input, take 18,500. If it is gross production, take 15,000. And if it is material input, assume it to be the current input. And if you want to take the opening WIP also, write a footnote, whatever you are assuming. But the questions in exam will not be so vague. They will have a clear language, what you have to assume. But even if then you think that there's an assumption required, you can do that. All right, so opening WIP was 1,500 units and introduced were 18,500 units. Once again, there is a message in the chat window. Okay, thank you. So total input was 20,000. What happened to the total input? Out of this 20,000, 2,000 was lost. 12,000 moved to the next process, 14. 5,000 post closing WIP 19. Therefore, there is a missing balancing figure that there must be an abnormal loss of 1,000 units. And out of the 12,000 units produced, since we are following FIFO method, we'll assume 1,500 has been the ones which were opening WIP, so they did not require any material, but only 2/3 in labor and overheads. However, the remaining 10,500, everything is done in this period only. Now it is simple once you have pasted all the information which is given in the question. 2,000 into 0% is 0. 2,000 into 0% is 0. 2,000 into 0% is 0. I'll use a different color pen for equivalent units. 1,500 into 0% is 0. 1,500 into 66.67%. If you apply the 66.67%, you may get a different figure. A rounding of process may be required because technically it is 66.666667. So I'll take it as 2/3, 1,000. 1,500 into 2/3 is 1,000. 1,500 into 2/3 is 1,000. 10,500 into 100% is 10,500. 5,000 into 90% is 4,500. 5,000 into 30% is 1,500. 5,000 into 30% is 1,500. 1,000 into 100% is 1,000. 1,000 into 100%, 1,000. 1,000 into 100%, 1,000. So the total equivalent units as far as labor and overheads are concerned and material is concerned. So equivalent units of material is 10,500 plus 4,500, 15,000 plus 1,000, 16,000. Equivalent units of labor is 1,000 plus 10,500, 11,500 plus 1,500, 13,000 plus 1,000, 14,000. And similarly, equivalent units of overheads are also 14,000. A piece of advice here, if you are in examination, because you are short of time, and here we see one pattern that the labor and overheads percentage was same for opening WIP also, for closing WIP also, and for abnormal loss, there is no different percentage given. So we have assumed that also as 100%, same for labor and overheads. 100, 100, 30, 30, 66, 66.67. So in that case, don't create 3 columns, just create 2 columns. One is for material and the second one should be combined for labor and overheads. So this will save some time for you in writing. Okay. So 16,000 units of equivalent units of material, 14,000 equivalent units of labor, and 14,000 equivalent units of overheads. Once again, we have a chart window. Abnormal loss, can we take it as a percentage of closing WIP or always 100%? Abnormal loss is to be taken as 100%. But if specifically a percentage is given, that abnormal loss for scrap units, it will not say abnormal loss, it will say scrap units were 60% complete as far as material is concerned, 30% complete as far as labor is concerned, and 20% complete as far as overheads is concerned, then you will take it in that percentage only. Think about it, you are preparing a chapati, so you burn it on the one side. So you don't bake it on the other side also and then throw it or then discard it. You know that it is discarded and you will create it as process. But sometimes whether a unit is defective, it's not good enough, is detected only when it is 100% complete. So don't take it as closing WIP until and unless specifically said. So if the percentage of scrap units is also given, completion, degree of completion of scrap units, apply that. Otherwise, use 100% for abnormal loss, and normal loss is always 0%, even if this is given. Why? Abnormal loss units, scrap units, cost is to be borne by good units. Therefore, normal loss should always be taken at 0%, right? So this is how you prepare the statement of equivalent units. And if all the percentages across opening WIP, closing WIP, and scrap is same for labor and overheads, in this particular uh, table, combine the labor and overheads. Don't create a separate column, otherwise you will waste time. So I hope this is clear. We'll continue with the same question again. If you look at this question, there is not even a single figure where the amount is given in rupees. Everything is talking about units. So I'll take exactly the same example, but there the amount of opening WIP will also be given. What is the cost of 18,500 units? That will also be given. How much wages and overheads are incurred? That will also be mentioned, as well as the closing WIP and normal loss, everything will be given. One more change I have made in that question is, instead of units transferred to the next process 12,000, I have increased this figure number so that we will do the question with abnormal gain. How you prepare the statement when there is a abnormal gain. Okay. So hope this is clear. Now, in this example only, I'm using a different color ink to tell you what changes will occur if you have to do it using weighted average. So the first change will come here also, that you have to do it using weighted average. And second thing is, this too will not be different. You will call it units transferred to next process. And that will be 12,000, which will be taken as 100% complete. That's it. So 12,000, 12,000, 12,000. So this will be 12 plus 4,500, 16,500 plus 1,000, 17,500. This will be 12 plus 1,500 plus 1,000. So this will be 14,500. And this will also be 14,500. So what will be the difference? What you thought was done in the previous period, like 1,500 into 100% complete opening WIP. This will be assumed to be done in this period. 1,500, 33 1 by 3% complete. So 500. That 500 we will also assume that that was done in this period only. Okay. Why? What will change? This figure will change from 1,000 to 1,500. 1,500. And this will change from 0 to 1,500. So everything that was done in the previous period, we will assume that it is done in this period only. So we will bring the units also in this period from scratch, and the cost also we will add to the cost of those units. Material cost will be added to material, labor cost would be added to labor, and overheads cost would be added to overheads. Okay. So that is how that's the only change you will do in weighted average. One, instead of FIFO, you will write weighted average here. And two, you will not bifurcate the 12,000 units into 1,500 and 10,500, just 12,000, 100% complete in this period. So automatically your answers will change accordingly. Rest, nothing else is required to be done. Once again, we have a message. In this case, closing WIP should be 0% complete. Why should be 0% complete? It's been given that your closing WIP was 90% complete and labor and overheads 30% complete. So whether you are following weighted average or FIFO, this will remain same. The only thing what I am assuming in FIFO, I am assuming that this was already material wise, this was 500 units complete. Overheads wise, this was 500 unit complete. So in this period, I have applied 0 units of material and 1,000 units of labor and overhead. In weighted average, I will say that material labor overheads was zero complete and entire 1500 is done in this period only. So in this period, it's not 10,500 units from the 18,500, but entire 12,000 units are 100% complete in this period only. Closing will remain as it is because this closing will then move to the next period. And when it will move to the next period, we will forget that we have completed it 90% and 30%, and we will also take that as 0%. In the next period, closing WIP will be 0%, if that is what you are asking. Yes, abnormal gain is always 100%. Even if the scrapped units mentioned, scrap is 60% complete as far as material is concerned, 30% complete as far as labor is concerned. Abnormal loss will gain will always be 100% complete. Okay. And you will see that there will be one more change in the weighted average. So if weighted average, if there is a FIFO method, 1500 units of opening WIP is given, I can say that it is costing 10,000. If this is information is given, I cannot apply weighted average. I have to apply FIFO only. But if the information is given that material wise 5,000, labor 3,000, overheads 2,000, that's the 10,000 rupees. Then I can apply the weighted average because material cost will be added in this material cost. Labor cost will be added in the labor cost. Overheads cost will be added in the overheads cost. So whatever you have done in the previous period, we are ignoring it. We are bringing it to the next period as if we have completed it in this period only. And all the costs, as far as material, labor, and overheads are there, they have also been incurred in the next period only. Okay. Right. So I hope this is complete. So in weighted average, what will you do? You will not write opening WIP now complete or introduced and complete. This will be one only, 12,000 units, 100% complete. So opening WIP we were taking as 0%. So material units will be added by 1500. In opening WIP, labor was one third complete. But here we have assumed it to be 100% complete. So plus 500 will be for labor and plus 500 will be for overheads and plus 1500 would be for material. Rest everything will remain same. So now look at the same question. This time amount is also given. So there is no detail of 15,000. This question has to be done using FIFO only. Now input material is 52,000 rupees. Labor is 14,000. Overheads are 28,000. Closing WIP again 5,000. 90% complete as far as material. 30% complete labor and overheads. Normal process loss is again 10% of total input, which means opening WIP plus input units. We have one more information related to money or rupees, that scrap can be sold for 2 rupees per unit. And like I said, I've changed one figure. Units transferred to the next process are not 12,000 but 15,000. Okay. So once again, we'll prepare the statement of equivalent units, which I'm preparing to some extent here only as far as units are concerned. Input was 1500 plus 18,500. So the total is 20,000. What happens to this 20,000? There is a normal loss, 10% of total input, which is 2,000. There is a closing WIP, 5,000. Plus there is a units transfer to next process, 15,000. This increases the total. This makes the total not 20, but 22. So minus 2,000 match the total of units. This minus 2,000 becomes abnormal gain. So once again, FIFO method, statement of equivalent units. If you will remember it by now, 1500 and 18,500. Total is 20,000. Normal loss is 2,000, which will always be taken as 0% complete. Opening WIP now complete 1,500 units. Introduced and completed is 13,500. Why? Because 15,000 units have moved to the next process. Material we don't need to incur. Labor and overheads we need to incur 2/3. Closing WIP 5,000. 90% complete as far as material is concerned and 30% complete as far as labor and overheads. There is no abnormal loss, there is abnormal gain. So minus 2,000, that is always taken as 100% complete. Even if his scrap percentage is given, you will always take abnormal gain as 100% complete, because the word gain itself means that these units are completed and transferred to the next process. And you cannot transfer incomplete units. I take red now for the equivalent units. 2,000 into 0%, 2,000 into 0%, 2,000 into 0%. 1,500 into 0%, 1,500 into 2/3 or 66.67%. 13,500, 100%. 100% and 100%. 5,000 units, 90%. 5,000 units, 30%. 5,000 into 30%. 2,000 into 100% is 2,000, 2,000 and 2,000, but these are in negative. Total equivalent units as far as material is concerned, 13,500 plus 4,500 minus 2,000, 16,000. 13,500 plus 1,000, 14,500 plus 1,500, 16,000 minus 2,000, 14,000. And similarly, this will also come out these things. So this will be a very important information from process statement of equivalent units. 16,000, 14,000 and 14,000. Another important information would be abnormal gain is 2,000 units. Closing WIP is 5,000 units. 15,000 units are complete, out of which 1,500 was opening WIP and 13,500 is currently introduced and completed. We know that normal loss will be sold for 2 rupee per unit. Second, you will prepare the statement for each element of cost. So material is the first element. The total cost of material is 52,000. Less scrap realized from normal loss. 2,000 unit is normal loss, which can be sold at 2 rupee per unit. So minus 4,000. So the total cost of material is 48,000, which is to be borne by equivalent units of material, which is 16,000. So the cost per unit comes out to be, for material, 3 rupee per unit. Labor cost is 14, overheads is 28. Second is labor. Cost is 14,000. Equivalent units are also 14,000. So the cost comes out to be 14,000 divided by 14,000 units, 1 rupee per unit. Overheads, 28,000. Equivalent units for overheads are also 14,000. This will come out to be 28,000 divided by 14,000, 2 rupee per unit. We have another chart. 1,800 units scrap to be deducted from material as normal loss is scrapped. We don't have 1,800 units scrap. We have normal loss is scrap as 2,000 units. Okay, Astha? Normal loss units is 2,000 units. 10% of total input is 20,000. And if you look at the scrap technically, out of 20,000 units, 15,000 units are moving to the next process and 5,000 are closing WIP. So we don't have any scrap as such to be sold. However, no, not to deduct abnormal gain or loss. There is no scrapped units, but we had expected that there would be a 2,000 units of scrap normal loss, and the scrap realized from normal loss will be deducted from here. Had there been in the previous example, like you've seen here, there was an abnormal loss of 1,000 units. So there we would have calculated what is the cost per unit, and from that we would deduct 2,000 units because this 1,000 units will also fetched us 2 rupee per unit. Okay, so once again, we had 1,500 units of opening WIP, 18,500 was introduced, out of which there was a 10% normal loss, which is of total. So 2,000 units. Closing WIP is 5,000. And in the next process, 15,000 units are transferred. This totals the output to 22,000, whereas we had only 20,000 units. So instead of debit or credit, here in the statement of equivalent units, we will subtract it from the total minus 2,000, and so that the input and output unit matches to 20,000. So here we have subtracted. And then we have found out the cost per unit of each element. And now we will bifurcate it against closing WIP, for example. So what is the value of closing WIP? Closing WIP is 5,000 units. Equivalent units as far as material is concerned, 90%. What is the cost per unit for material from statement 2? It is 3 rupee per unit. So the closing WIP material cost is 13,500. It is 30% complete as far as labor is concerned. Cost per unit of labor was 1 rupee per unit. It is again 1,500 units, 30% complete as far as overheads are concerned. And the cost of overhead is 2 rupee per unit. So the value of closing WIP is 13,500 plus 1,500, 15 plus 3, 18,000. Once again, there is a message in the chat window. So if abnormal loss is there, say 1,000 units, then scrap to be deducted 2,000 normal and 1,000 abnormal from material cost. Scrap is to be deducted 2,000 into 2 from the material cost. Abnormal loss scrap will reduce the costing P&L account loss. From here, you will deduct only 4,000. Like I said, the fundamental rule will remain same. Total cost of material or whatever minus scrap realized from sale of normal units. Scrap from normal loss is only deducted, not scrap from abnormal loss. The abnormal loss scrap is deducted from the abnormal loss account only. That loss is not to be reduced for the good units. Okay. One difference which we have taken is here we are not taking the total cost of material, labor, overheads. We are deducting the scrap from normal loss only from the total material cost. Because here we have to find out the cost per unit for each element, material, labor, overheads. So the entire credit of scrap realized from normal loss goes to the material only is assumed. Okay. Only 4,000 will be deducted here. Even if there would have been 1,000 abnormal loss, 6,000 will not be deducted. Only 4,000. So you have found out that the closing WIP is worth 18,000. Similarly, what is the value of abnormal gain? 2,000 units, which is 100% complete as far as material, labor, overheads. I will write in short now MLO, just for quickly winding up this process account. So this will be actually 2,000 units into 3, 2,000 into 1, 2,000 into 2. So that will become 12,000. 2,000 into 6, 12,000. What is the value of units transferred? Bifurcate it into 2. Opening WIP, 1,500 units. 0 as far as material is concerned. 1,000 units as far as labor is concerned. And 1,000 units as far as overheads is concerned. 0 into 3, 1,000 into 1, 1,000 into 2. So it's into 0. 1,000 into 1 is 1,000. 1,000 into 2 is 2,000. So it took 3,000 rupees to complete the opening WIP in this period. And completed and transferred, introduced and completed in this period, 13,500. 13,500 would be 13,500 as far as material is concerned, labor is concerned, and overheads are concerned. At the rate of 3, 2, 3, 1, and 2. So 13,500 into 6, 13,500 into 3 is 40,500. 13,500 into 1 is 13,500. 13,500 into 2 is 27,000. 81,000. So now you have the total cost assigned to each of the elements. So total cost was how much? 52,000 was material, 14,000 was labor, 28,000 was overheads. This totals to 94,000. Out of 94,000, 4,000 is recovered from sale of normal loss. So 90,000 should be assigned to this. Okay. You can see 52 plus 14 plus 28. This is your total cost. 52,000 plus 14,000 plus 28,000, which is 94,000. And 94 minus 4,000 realized from normal loss should be assigned to this. Now check whether this totals to 90,000 or not. Here, abnormal loss gain is in the negative. So 90 plus 12 you can take, or 18,000 plus 3,000 plus 81,000. Total is 102,000 minus 12,000. It is 90,000. Okay. 18 plus 3 plus 81 minus 12. This, you can verify your answer. If this totals to 90,000, it's all accurate. Had there been no abnormal gain, but there be abnormal loss, then this would also be positive. All this will add up to this total. Okay. And finally, using this, you can prepare a process account very simply. I'll just show it here how you prepare the process account. You will write opening WIP 1500 units, which is 15,000. Then you had 18,500 units raw material, which was 52,000. Then labor and overheads, 14,000 and 28,000. Abnormal gain you will write here, 12,000. So in this 94,000, there is an addition of plus 15,000 and plus 12,000. So the total on debit side is 1,21,000. By normal loss, 2,000 units, fetching 4,000. By closing WIP, 5,000 units, 18,000. And the balance is, which has moved to the next process, which is 81 plus 3, 84, plus 15 by finished goods transferred to next process. 84, 81 plus 3, 84 plus 15, 99,000. Check whether your total matches or not. 99 plus 2, 1,21,000. This is your process. Okay. Last in the process account is inter-process profits. So what happens when there are inter-process profits? Instead of transferring the output of process 1 to process 2 at cost, process 1 would want to charge some profit. So output of process 1 is transferred to process 2 at 25% profit on transfer price. Transfer price is just like your sale price, but since you are not selling your product to the outsider, you are transferring it to the next process within the organization. So you don't say sell price, you say transfer price. So if you want like 25% profit on sales, so always take this as 1/4 on sale, which will become 1/3 on cost. 25% on sales is 33.33% on cost. So if you reduce it to fraction, like 25% on sale is 1/4, you can subtract the numerator from the denominator, it will become 1/3 on cost. Had it been 40% on sales, so the fraction of 40% is 2/5. So 2/5 on cost, to sale, 2/3 on cost. Okay. So 25% on transfer price is 1/4 on transfer price, which is equivalent to 1/3 on sale cost. So whatever will be the cost of process 1, the goods will move to the process 2 at 1/3 profit of the total cost. Similarly, process 2 is going to transfer to finished stock at 20% profit on transfer price again. 20% is 1/5 on transfer price, which is equivalent to 1/4 on cost. Or you can say 20% on profit is equivalent to 25% on cost. Then stocks in processes are valued at prime cost. So when you are doing a question on inter-process profit, it's very important that you take it at, you see that the stock should be valued at either prime cost or at works cost. So what should be your order? Basically, if the stocks are valued at prime cost, how do you take it? You write opening, then you add material, then you add labor, then you subtract closing stock, then you get a total, then you add on this overheads. Once you add the overheads, you will get total cost. On this, you add your profit. Had it been on works cost, it would have been opening, material, labor, overheads. Then you would have got a total. Then you would have subtracted closing stock. And then you would have got another total of goods transferred. And then you would have added profit. But here, first opening, material, labor, take a total here and then subtract the closing stock. Another important thing is in this questions, we take stocks on weighted average method. Though it is not said, but we follow weighted average. And that's the more convenient one. Otherwise, what you will have to do is you will have to keep the opening stock separate. First take the total of two, then separate the closing stock, and then add opening again. So if the stocks are to be valued at FIFO, the closing stock will have only the current costs, not the opening WIP. But here I'm taking opening, material, labor, or adding all this and then subtracting the closing stock, which means the stocks are valued at using the weighted average method. You can write this as a footnote. Finished stock is to be valued at a price which is received from process 2, and the entire sales during the process was 1,40,000. Now, inter-process profits involves one concept that if you are transferring from first process to second process to third process, process 1 has earned some profit, process 2 has earned some profit, process 3 or finished stock has earned some profit. But if it has a closing stock here, that means whatever the profit process 1 earned is unrealized in this closing stock. And similarly, if this finished stock account has some closing stock, so whatever the profit was there of closing process 2, that is blocked, as well as whatever the profit was there of process 1, that is also blocked. So to calculate this simply, we prepare this statement, which makes it things very simple. So let's say this is your process 1. You will simply write to opening WIP, opening process account, opening stocks, to material, to labor, get the total here, less closing stock, because stocks are valued at prime cost. Once again, take the total here, add overheads, take the total here. This becomes your total cost of goods transfer. Add profit and simply just put in the values, you will get your answer. Remember this format. So opening stock is 7,500, material is 15,000, wages are 11,200. Wait here, take the totals. In process 1, there is no profit. Whatever the total is the total cost. Okay. 7,500, 15, 11,200, and there is a closing stock of 3,700. So first you take the total, 7,500 plus 15,000 plus 11,200, 33,700. 33,700 is the cost. There is no profit. Minus 3,700. This 3,700 will be deducted in this proportion only. So whatever the closing stock is comprised of entirely cost, no profit. So 30,000 of opening raw material and wages moves to the next process. On this, we incur overheads of 10,000. which is all cost, no profit. So total 40,500 worth of goods will move to the next process, which has all cost, no profit. In this, we add profit. That was 1/4 on transfer price, 1/3 on cost. So 33.3% on cost. 13,500, which is pure profit, no cost. So this will go to the next process. Credit side will write by transfer to process 2. 54,000 worth of goods, which has a cost of 40,500, in which profit is 13,500. And that completes your first process account. In second process, once again, you will start with opening stock. Process 2, process 1, 2 material, 2 labor. Okay. Then take the total cost of production minus closing WIP, closing stock, sorry. Take the total once again. Add overheads cost. Take the total once again. Total cost of goods transferred. Add profit. And this will move to the next person. So if you look at process 2, you already had an opening stock of 9,000 and inter-process profits included in the opening stock was 1,500. First process will not have any inter-process profits. So 9,000 was the opening stock and inter-process profits were 1,500. 15,750 material, 11,250 labor, 4,500 overheads and 4,500 closing stock. 9,000, which has an inter-process profit of 1,500, therefore its cost is 7,500. From process 1, 54,000 worth of goods have come here, which is costing 40,500, which has an inter-process profit of 13,500. Then material has been introduced of 15,750. Wages have been introduced 11,250, which is pure cost. No profit is involved here. Once again, you will take the total 9,000 plus 54,000 plus 15,750 plus 11,250. So this is 90,000, which has an inter-process profit of 15,000. So its cost is 75,000. Now you have a closing stock of 4,500. What is the proportion of 4,500 to 90,000? It is 5%. So apply the 5% to 7,500 also and 5% to 15,000 also. So trying to move 85,500 worth of goods whose cost is 71,250 and which has a profit of 14,250. You add overheads 4,500 to this, which is pure cost, no profit in this, and 90,000 worth of goods, which has a cost of 75,750, which has a inter-process profit of 14,250. Add the profit of process 2. Process 2 earns 20% on transfer price. 20% on transfer price is 1/4 on cost or 25% on cost. 25% of 90,000 would be 22,500. Cost, all profit. So ultimately, by finished goods account, 90 plus 22, 1,12,500 worth of goods, which is costing 75,750 and which has an inter-process profits amongst them of 30. So in the similar manner, you will prepare the finished goods account, opening stock 22,500, inter-process profits at 2,500, balance would be cost. Then you will add to this 54,045, 1,12,500, 75,750, and 36,750. From there, you will subtract the closing stock of it to 11,250, and balance is sold for 1,40,000. So that would be your profit. Right? So this is how you prepare the inter-process profit. Automatically, whatever the closing stocks are and whatever the profit is blocked, it will contain automatically that. There is a case study in your books. You can do this to see whether you have understood the concept of equivalent units properly or not. Now we move on to next topic, which is joint and byproducts. Now the concept which is involved in joint and byproducts is you take up a raw material somewhere here, start applying wages and overheads on this, put it to a process, and there comes a time that when it reaches here, it splits. So after some time, the material will split into two or more products. These two or more products, if they are all significant, we call them joint products. We call them joint products. So you may have joint product A, joint product B, joint product C. Or if one is a main product, the others become byproduct. So you may have main product A and byproduct B and byproducts C. You may only have two joint products and one main product and one byproduct. Anything is possible. So the whole topic or the whole concept is whatever the expenses you have incurred up to the split off point. So these are expenses incurred up to split off point. Which may also be called as joint cost or pre-separation cost. So the whole chapter is how are you going to divide these joint costs or pre-separation costs amongst the joint products or main product and byproduct. We are coming on to that, Astha. You have asked a question, byproduct cost will be deducted from total joint cost or byproduct selling price will be deducted. We are coming on to that. So our job is to bifurcate this joint cost amongst the various joint products or amongst the main product and the byproduct. Since byproduct is not very significant, or maybe we don't have much information about it and we just have the selling price of the byproduct, the entire selling price of the byproduct may be deducted from the joint costs to find out the cost allocated to the main product. Alternatively, it is possible that these products, main joint products or main product and byproduct, they are subjected to subsequent processes. Some expenses are incurred even after split off. So these are called post-separation expenses. So if post-separation expenses are given as XYZ here also and here also, then selling price should not be deducted for the byproduct. Selling price minus, if you know what the profit is, if you know what the post-separation cost is, all that should be deducted and balancing figure should be deducted from the joint cost. So coming on to how are you going to bifurcate the joint cost amongst the different joint products or main product and byproduct? There are different methods. One is physical measurement. In this case, let's say it's said that you are taken 1,000 kgs and product A is 500 kgs, product B is 300 kgs, product C is 200 kgs. Even if there is a product process loss, if it is this 50, 30, and 20, in that ratio only, you are going to divide the joint cost. So this is physical measurement. Then there are some other methods like net realizable value. So in net realizable value, what you do is you look at the selling price of each product. From there, if you have the information of what the profit is, separate that. Then if you have the information of any selling and distribution expenses incurred, deduct that. If you have information of any post-separation costs incurred, deduct that. So once these three are deducted, you will get some figures. If these figures is exactly equal to your total joint cost, then this is the share of joint cost for each of the product. But if it is the total is more than joint cost, then this becomes the ratio in which joint cost will be allocated. If you don't have information about selling and distribution, ignore it. If you don't have information about profit, you can ignore it. But if you have only post-separation expenses, you can start that. This becomes kind of net realizable value. But sometimes the market price of the product is given at split off point also. So market price at split off point is given, then you use this only because no other information, subsequent information will become relevant. But if you have information about the price, profit, you can deduct that. But if market price at split off point is not given, market price after further processing is given, which means this value, then market value, this value has to be used to find out the net realizable value. There are other methods also. One is um, technical survey or a point survey method. So technical estimates may be calculated where these methods do not work properly. And there can be other methods like contribution margin approach. So where the joint costs are separated as variable and fixed, you can use contribution margin approach also. And sometimes gross margin approach may also be followed. So now let us look at one question, how a comprehensive question, and from that we understand how the joint costs will be bifurcated. There's a company, it processes the raw material in department 1 and it produces 3 products with, let's say, A, B, and X at the same split off stage. So you are incurring some expense, and after some time you get 3 products, A, B, X. During the period, 180,000 kgs of raw material was introduced in the process, and the total joint cost comes out to be 12,88,000. So our job is to bifurcate 12,88,000 amongst A, B, and X. The resultant output of A, B, X is 18,000 kgs, 10,000 kgs, and 54,000 kgs. If you will add the two, all the three, 54 plus 18, 72 and 10, 82,000 kgs. Whereas the input was 1,80,000 kgs. So 98,000 kgs is lost. So maybe the physical measurement may not be an appropriate method because all processes may have different loss percentages. But A and B were further processed in department 2 at a cost of 1,80,000. So 10 rupee per unit was the further processing cost. And 1,50,000. 10,000 units, 1,50,000. So that means there the further processing cost was 15 rupee per kg or per unit. X was also further processed, but this was processed in a separate department, department 3. And this costed 1,08,000. So 54,000 kgs processed at 1,08,000. That means at the rate of 2 rupee per kg. So post separation cost per unit we have found 10 rupee, 15 rupee and 2 rupee. There is no waste in further processing. That means the output after further processing is exactly 18, 10 and 54,000. The details of sales affected during the period was as under. 17,000 kgs of this was sold. That means A has a closing stock of 1,000 kgs. B has a closing stock of 5,000 kgs. Entire unit is not sold. And X has a closing stock of 54 and 44, 10,000 kg. Right? We had 18,000 kgs of A, 17,000 sold, which means 1,000 was remaining. 10,000 kgs of B, 5,000 sold. So another 5 remaining. 54,000 of X, 44 sold, another 10,000 kgs. There was no opening stock. And if these products were sold at split off point, they could have been sold at 50, 40, and 10. So you could have sold them here itself at the rate of 50, 40, and 10. So like I said, if you have the sales value at split off point, you can use this method to allocate the joint costs. So 12,88,000 can be allocated in the ratio of 18,000 into 50, ratio 10,000 into 40, ratio 54,000 into 10. So what you are required to do is prepare a statement showing the apportionment of joint cost of A, B, and X. So sales value at split off point. Products are A, B, X, and you'll also prepare a column for total. This is your statement showing allocation of joint cost amongst various products. So 18,000 into 50 is 9 lakh. 10,000 into 40 is 4 lakh. And 54,000 into 10 is 5,40,000. 18,40,000 is the total. Nine lakh divided by 18,40,000 multiplied by 12,88,000. This is how you'll do the calculation, 1288. The share of joint cost that is to be borne by A is 6,30,000. For B, it is 2,80,000. And for C, for X, it is 3,78,000. We'll do one more thing here. We will also find out the cost per unit. 6,30,000 when divided by 18,000 units. So this I had 378 divided by 54,000 units. You can show your workings here properly, units, sales value, sales price at split of point, multiply the two, and then you will get this answer. 18,000 into 50, 10,000 into 40, and 54,000 into 10. And from here, you can see how physical measurement would have been absolutely wrong, because if physical measurement would have been used, you would have seen that 18, 10, and 54. So entire cost would have been borne by X, whereas it appears that A is quite significant as it is selling for 50 and this is selling for only 10 rupees. So when you will divide the 3,78,000 by 54,000 units, the cost per unit of this product comes out to be 7 rupees. So share in joint cost is 7 and post separation we have already calculated 2. For this one, 2,80,000 divided by 10,000 units. For this, the cost comes out to be 28 rupee per unit. And for A, 9 lakh divided by, 6,30,000 divided by 18,000. So this comes out to be 35 rupee per unit. So share in joint cost is 35 rupee per unit, 28 and 7 rupee per unit. So prepare a statement showing the apportionment of joint cost. Done. Prepare a statement showing the cost per kg of each product, indicating joint cost and further processing. So you see, we have already done the further processing 10, 15, and 2. And if we will add plus 10, plus 15, plus 2, add further processing cost, you will get the statement of total cost per unit. So for product A, it is 45. For product B, it is 28 plus 15, 43. And for product C, it is 7 plus 2, 9. This will become your second statement. There is a message in the chat window. Why output taken and not sales volume? Simply speaking, let's say you incurred a cost of 80,000 and prepared 8,000 units. So what is the cost per unit? We are looking here at costs. So 80,000 divided by 8,000, your cost per unit is 10 rupee per unit. Whether you sell 6,000 units or 2,000 units or 8,000 units or 0 units or just 100 units. It doesn't matter. We are calculating the cost. We are interested in cost accounting, cost, not the profit. When you are evaluating the profit, then you would have used 17,000 units sold. And another important aspect is here the sales value at split of point was given. If the sales value at split of point would not have been given, we would have find out what is the selling price per unit after sales. So 12,24,000 divided by 17,000. The selling price after split off is 72 for A and 2,50,000 divided by 5,000. It is 50 for B and 7,92,000 divided by 44,000. It is 18 for C. This is the sales price after split off. So if here in this question, had we been required to use net realizable value, so sales value after split off, then we would have taken 18,000 into 72, 10,000 into 50, and 54,000 into 18 to calculate the net realizable value. That sales value we would have taken. We would have again ignored quantity sold of 17, 5, and 44. Okay. So now we know one more information that this was costing us 35 plus 10, 45. Product B is costing us 28 plus 15, 43. And C is costing us 7 rupee per unit. Yeah. 7 plus 2, 9. Whereas after further processing, they are sold for 72, 50, and 18. So you know what is the profit per unit. To find out the profit, you will apply it to 17,000, 5,000, and 44,000. Then sales value, sales unit is important. Okay. So first we have prepared the share of joint cost using sales value at split off point. Then we have found out the cost per kg indicating share in joint cost plus further processing cost. So this is that statement you will do and show the calculations either as working note or here itself within brackets. Third, prepare statement showing a product wise and total profit for the period. Now that is there you will use 17, 5, and 44. Statement showing product wise profit and total profit. So once again, product A, product B, products X, and total units sold 17,000, 5,000, 44,000. You can take the total. Selling price per unit post separation. This you can take from the working note. You can create a working note where you have calculated this. This sold at 72. This is sold at 50. And this was sold at 18. 44, 792 divided by 44. Total sales value that was given 17,000 into 72, 1224, 250, and 792. 1224, 2,50,000, and 7,94, 92. Then you will write down the total cost. Joint costs and post separation costs. 6,30,000, 2,80,000, and 3,78,000. Post separation cost was 1,80,000 for product A, 150 for product B, and 1,08,000 for product C. So when you will subtract the cost, you will get profits. Always complete the total here also. Sales value total is 12,24,000 plus 2,50,000 plus 7,94,000. So the total sales is 22,68,000. Joint cost was 12,88,000. And post separation costs are 4,38,000. So your individual profits are 5,42,000 total. And for A, 12,24,000 minus 6,30,000 and minus 1,80,000. So maximum profit is generated by product A, 4,14,000. For B, it is okay, wait a minute. Joint cost will not be taken and post 1 minute. We will not use these costs, sorry. We will use the total cost per unit, which is 45 for A, 43 for B, and 9 for X. So 45 for A, so 17,000 into 45, 5,000 into 43, and 44,000 into 9. Total cost only you can take, or you can say 17,000 into 35 is joint cost, and post separation is 17,000 into 10. Because all the units are not sold, so you cannot charge the entire cost. So the profit for product A would be 72 minus 45, 27 rupee per unit into 17,000. 4,59,000. For B, it will be 5,000 into 7, 35,000. And for C, it will be 44,000 into 9, 3,96,000. So this is how your total profit will be reflected. 396 plus 4,59,000 plus 35,000. The total profit will be 8,90,000. As the total costs will not be taken, only that portion of the cost which is applicable to the sold units, not to the total cost of closing stock also. I'll erase this one. If you take the entire cost of 1288 and 438, then that would have been the profit if all the units would have been sold. Therefore, it is important that you find out the cost per unit. That means the share in the joint costs as well as the post separation cost per unit. And 45 for A, 43 for B, which is, and 9 for C. 7 and 2, 35 and 10. And for B, it was 28 and 15 per unit, and post separation cost per unit. Okay. So this will give you your total cost, and the profit is 8,90,000. One more question it is asking, state with supporting calculations as to whether any of all of the product should be further processed or not. So this calculation somewhere we have done here itself. If you look at this statement, you know what is the selling price at split off point and what is the selling price after further processing. So if you look at process A or product A, you can see that you are getting 22 rupees extra per unit, whereas the post separation cost is only 10. So like for product A, the incremental revenue is 22. 72 minus 50, whereas the incremental cost, that's the post separation cost, that is only 10 rupees. So you are getting 12 rupee per unit extra by further processing it. So A should be processed further. Looking at B, if you are selling at split off point, you are getting 40. But if you are selling at post separation, further processing, you are getting 50. So the incremental revenue is 10, which is 50 minus 40. Whereas the incremental cost is 15 rupee per unit. So B should not be processed further. What is the profit that we are getting from B? From B, we are getting a profit of 35,000. So if we had not processed B further, we could have sold B for how much? 5,000 into 40. Our sales would still have been 2 lakhs. And what would have been the cost? 5,000 into 28, not 43. We would have avoided 15 rupee per unit. So 1,40,000 would have been the cost only. So 2 lakh minus 1,40,000, we could have got a profit of 60,000. When we are further processing it, we are getting a profit of 35. But we could have got a profit of 60 had we sold it as it is. So the profit would have increased by 25,000 additionally by selling only 5,000 units. And if the entire lot is sold, then 50,000. Similarly for X, what is the incremental revenue? It is 8 rupee per unit, 10 and 18. 18 minus 10. You are selling your product for 8 rupee per unit extra by incurring a cost of only 2 rupee per unit. Is more than incremental cost, plus 6, plus 12, and minus 5. So B should not be processed further. A and X should be processed further. Right? So this is how you will show it in the statement, that it is advisable to process product A and X further, whereas B should be sold at split off point itself. Okay? So this is all about your joint and byproducts as well. If you have any questions or queries, you may please ask. Anyone has any question? There is something in the chat window. If in contribution margin method, we have come up with loss after subtracting variable costs, then we will deduct the entire fixed cost from another product, which is having profit even after subtracting variable cost. Yes, that's true, because the proportion of contribution margin for that product, which is having already a loss, is 0. in the negative. So you will not allocate any cost to that product. There is a very simple concept that the way we allocate cost depends upon also on the fact that whether it has the capacity to bear the cost or not. Okay. I'll show you further. Let us take an example. There are three products, A, B, and C. All three are joint products. The selling price is 10, 8, 5. Units that emerged after joint processing is 1,000. Let's keep 1,000 for all. And the variable cost, maybe it is given in totality. Let's say this is 3,000. This is 4,000. And the total variable cost is another 2,000. And there are total fixed costs also of 5,000. So a total joint cost of 4 and 3, 7, 9,000 and 5,000 is the variable cost, and fixed cost is 5,000. So if you will look at the contribution, you will see that this is giving us a contribution of 10,000 minus 3,000, 7,000. This is giving us a contribution of 4,000, and product C is giving us a contribution of 3,000. So your fixed cost 5,000 should be divided amongst A, B, and C in the ratio of 7:4:3. However, if let's say this was 6,000, you would have got a minus 1,000 here. Then the fixed cost should be shared between A and B in the ratio of 7:4 only. Okay, that is how you take it. Variable cost can be divided amongst physical units, no doubt. Yes, variable cost can be divided. Here I have taken it in the physical unit only because, see, I have taken the total variable cost 3,000 and I have divided in 1,000 units. So 3 rupee per unit is the variable cost here. 4,000 divided by 1,000, 4 rupee. So you can take it as 10 minus 3, 8 minus 4, and 5 minus 2. So your contribution per unit will be 7, 4, and 3. 7 into 1,000, 4 into 1,000, and 3 into 1,000. That's the contribution. Here I have taken the units, same physical units as 1,000 each. That's why you are getting the total variable cost I have taken. Otherwise, I would have calculated dividing by units first. Right? I'll just take a quick view of byproducts also. So when you have byproducts, you deduct, either you ignore it, just like normal loss, and let the total cost be borne by main product, or you deduct the selling price of byproduct if it is known to you from the joint costs. Or if byproducts are also subjected to further processing costs, if they are further processed, then you can subtract take the selling price minus further processing cost, and that you can, this amount will be deducted from the joint cost to find out the share of joint cost in the main product, which will give you share in joint cost for the main product. Okay. Right, team. This is all from my side today. Is there anything you want to further ask? Please ask. I'll take up your query. Else you can paste it in the BOS portal. From there, your queries will be answered. I hope this revisionary session has revised all your concepts in process costing and joint and byproducts. Thank you so much, all of you, for patiently listening. There is a question from chat window. If wastage units are there, then it will be considered as normal or abnormal. So wastage units are there. Uh, if it is a question of joint products, wastage units will also be apportioned amongst the joint products in that ratio only in which the final outcome of joint products is there, right? So for example, if you take 1,000 kgs and there are three products A, B, C, and also there is a wastage. Okay, so let's say 300 units, 300 kgs, 200 kgs, 400 kgs, and 100 kgs of wastage. So first apportion these 100 kgs of wastage amongst the three main products, maybe in the ratio of 3:2:4. Okay, so 33.33 units will be gone here, and 22.22 units would be gone here, and 44.44. So the total will be of 333.33 units. In this way, you will divide the physical units. So the entire 1,000 kgs cost will be borne amongst ABC in this ratio, right? So wastage can be allocated among the good units first, and then you will, yeah, if it is a normal wastage. Yeah. Thank you so much, all. Thank you, Kuldeep. All the best to everyone who's appearing in this attempt. I'm sure you will pass with flying colors. All the best once again. Question 6 of study material, they're asking. Okay, can I take 5 minutes more, sir? Okay, I'll take question number 6 of study material. Okay, just give me a moment. Uh, process costing, you are asking, or joint and byproducts? The question you provide, material costing. Okay, you're not asking anything from process costing, you're asking for the material costing. I will upload the answer for material costing, question number 6. I'll just see. Right. Thank you, everyone. Okay, bye. Anyone else has any question? I'll provide the solution and upload it in the notes. Question number 6, which I have taken in the assignment of material costing. You are asking the solution for that. I will provide it. Right. Thank you, everyone. Bye. Have a good day and all the best once again for your exams. Thank you so much. Yes, we are done with the session. Thank you so much. Right. Good day. Thank you.